At the outset, let me first thank all of you from the bottom of the heart for taking the efforts and making it to this important day for all of us at Team Senora. It's a pleasure to see you guys being here to enjoy, to make it a memorable day for all of us. I will start by talking about Senora. Let me tell you one thing, Senora is not just an organization. It's a thought, it's a philosophy. It is the passion of a group of people who have come together to create something meaningful. We are in the business of making money, but it is not only about making money. It is about making the money in the right way. It is about making the money with integrity, with philosophy, and most importantly, with the right risk management. Why we believe that risk management is the most important thing for us is because the money is not only a hard-earned money of yours when you are giving us to manage. It is the hard-earned money of your family members, your friends, who have also sacrificed their personal life in order to you to make this money. We know what Ajinkya sir has achieved, but it is not just his efforts, it's the efforts of the people around him. He told a very story of how his father sacrificed his job days and leaves so that he learned cricket. We heard from Radhika ji the anxiety she faces when he goes and plays. So the money is not earned only by Ajinkya sir, it is earned by the family, it is earned by the people around us. And hence, we as money managers are not responsible only to Ajinkya sir, but to his family also. And hence, managing the risk is the foremost thing at the base of Senora. That is why we always emphasize that risk management is first thing and returns are secondary and not the other way around. Senora came into the existence only with an objective which was embarked in my mind back my childhood. I am born and brought up in the city of joy, Kolkata. Kolkata is a city where stock market is considered nothing less than a casino. It's a city where stock market was considered to be a place for gambling. There was hardly anything called process. There was hardly anything called patience. For people from Kolkata back in 1999, when I learned about the stock market, it was all about buy today and make profits tomorrow. But something happened, one incident, which was the stepping stone to the thoughts built in me and Senora. Let me share that story with you today. Back in 1999, I met this friend of my father, late Mr. Gopal Das. He shared one incident and it changed my life and my thoughts, and it is with me even today and it will remain with me forever. The incident is, he told me that he made an investment in a company, Colgate, in the IPO of Colgate, which came out in 1978. 2 decades later, purely because of that investment, he married his daughter off. Only one investment, part of his small book, helped him meet the once-in-a-lifetime expenses. That's the power of compounding. That's the power of investment. And that's something which I never forget and I will never forget. That was the stepping stone of what Senora is today. We wanted to be part of many such stories where we help our investors meet such kind of once-in-a-lifetime expenditures by only investing in certain quality names. That's the power we want to build. What is our belief? Our belief is in that the investments are for long term. Hence the power of long term investments. Let me explain with one example. 100 rupee invested today, if in 4 years becomes 200 rupees at a 15% CAGR, becomes 400 rupees in 10 years, but in 20 years it becomes 1600 rupees. The kind of growth it happens once the years goes after an inflection point is actually phenomenal. Now, let's extend this example and look at what happens to the returns if we make it from 15 to 18% CAGR. The numbers are astonishing. In 20 years, from 16x, it becomes 27x with a mere 3% change in the CAGR, which means even a small outperformance continuously over a period of time helps in wealth creation. Wealth creation is never short term. We have always read that across books, but here is the example, here is the eye opener, something which we probably know, but we keep missing out over a period of time. But it is not about returns. Let me come back. It is not about returns. It is about the returns in the right way. And let me explain a story which it's not a story, it's an incident. And someone who's source of that satisfaction to me is present in the room. My batchmate Kunal, who has been with us for a few years, came to me in 2021 and introduced his colleague who had gone through a rough patch in his personal finances, where he bought a house just before COVID and had to sell it off to repay the loan because COVID created that uncertainty, and hence had lost a major part of his finances. He was left with a part of his true savings and was very apprehensive about what he needs to do, because if he goes to the FD, he is not going to beat the inflation, and if he invests and loses money, what happens next? It was a peculiar situation. Senora handled it with care, and I can very proudly say that today his IRRs are similar to that of Kunal's wife, and such was the story that friend of mine, and I call him a friend rather than a client today, actually introduced me to his brother, who is also incidentally present in this room. That's the kind of satisfaction Senora talks about. I will not go into the details of how we handled it individually, because that's a personal aspect of it. Yes, we are here to make money, but we are again here to make money with the right risk and right risk management. That is the ethos which Senora believes in. One question, back in 2019 when we launched, was why large caps? And that's a question which I answer in every new meeting me or Vivek does. Why only large caps? When the money is when you are so bullish on the economy, when you are so bullish on the equity markets, why not mid caps? Why not small caps? Why not small and mid caps when everybody else is doing? Large caps is very boring. You can't keep finding new ideas in large cap. I think the base for that is because I have seen how risk plays out. Let me give you two incidents where that will tell you where the foundation for this thought was built into Team Senora. This first incident is immediately after the Lehman Brothers. I was in Ambit for 2 years, freshly out of the campus, 28 years, 29 years, talking all about returns and everything. And then I met this hedge fund manager based out of Singapore. He was managing a large book. He was probably more bullish on India than me. Then when he saw the Bear Stearns movement coming, if you guys don't remember, for those, we had a Bear Stearns bankruptcy first, and then the Lehman Brothers happened. So when the Bear Stearns bankruptcy was about to come, then also the market was in a denial mode, because people had not seen bankruptcy for decades. But this guy was skeptical, and he could exit his positions within a day because he was in all liquid names. And so he was not only ahead of the curve, but he could exit because he was in all liquid names. And now I will come to the second part of the incident, which is 10 years later, at the ILFS time when India's Lehman movement happened. I call it India's Lehman movement. There was this fund manager friend of mine, managing a PMS of around 500 crores, specializing in mid and small caps. Couple of stocks which I know, which I was also a big fan of. I'd say that if ever I was investing at that time in my personal book, I even would have those stocks in my portfolio. When the ILFS movement happened, both the stocks were mere 3% of his portfolio, just 1.5. So There was this client, corporate client, who had 50 crores with that PMS. The client needed the money because the bank's liquidity was out, and for the business he needed the money. He asked for the redemption. Both the positions were only 1.5 crores each by value. Very small portion. Any guesses how many days you would have taken to sell that during the ILFS time? We have people who are that experienced. A rough guess. 1 month, 25 days. You guys are almost there. 22 trading sessions to sell it. Because whenever he used to tell his dealer sell 1,000 shares, stock 2% नीचे जाता था. Obviously, no fund manager can say to sell when there is no depth in the market. These two incidents have stayed with me and are become a part of Senora's life. We strongly believe that the money which we manage needs to be available for the client when they need it. What is the use of growing the money if we can't return the money to the client when he really needs it? That is only possible in large caps. There have been few cases I've seen where within because of a medical reason or some reason the client needs the money because they have not done their financial planning in the right way. I can't tell. Okay, I can say that the markets are closed today, but if the markets are open, I need to sell and pay. And if I have to pay at a throwaway price, Senora is not ready for it. We don't want to indulge into something where our ethos, मेरा जमीन नहीं allow करेगा. I will not do that. The other thing which I am told when we launch our AIF, and I keep facing it even today and probably will continue to face even for the next decade, is there is hardly any pure large cap focused fund. Why are you here? Large caps people invest through ETFs. This business is not scalable. You will not get the kind of AUMs. Why don't you make it a flexi cap? For the sake of it, add 2 mid caps. Your research is good. You can do it. Why don't you do that? Yes, they are right. Data shows that. And most of the people who have come have told us are our well-wishers, are stalwarts in the industry, and I can't ignore it. But that doesn't fear us. I'll take a moment and play a video which inspires Senora, and I'll come to the story behind it.
What do you think are your team's chances in the Cup?
We here to win.
To win the World Cup?
What as we here for?
Ajinkya sir said that the Australia series still gives him goosebumps. This video gives me the goosebumps. When Mr. Kapil Dev went to England, India has a history of not even winning a single match. And he was talking about winning the World Cup against the mighty West Indies, who had 4 seam bowlers whom nobody could have played. People laughed in the follow-up scene. But in his mind, he was clear that his objective and vision is only one, that the trust in the capability and what he is here for. He never felt that I'm facing England in England, whom we have never defeated in England. He never worried about the Australians who had the Chappell brothers. If the vision is clear and if the confidence and efforts are in place, then anything is achievable. We have seen that. And that's the source of inspiration for us. Recently, I was reading an interview of Jasprit Bumrah, and it reminded me how a decade back when he came and made his debut in IPL, people said that with this bowling action, he is not going to survive even a couple of years. And yet, he has been a successful bowler. When he became successful, people said, okay, he is good for white balls because you need to make a small spells and you get a rest. He is not a test match bowler. Today his records in test matches are better than the greatest bowler I've ever read about, Malcolm Marshall. Why? Because of his hard work, because of his confidence, because of his managing his workload. And that's the inspiration for us. We take inspiration and confidence from what we see and what we do. The confidence comes not only because of the fact that we believe we can do it, because we have delivered what we believe in. We started managing public money as Senora advisors in 2019 with Sir's money. Before that, we were managing friends and families' money. May 2019 is where our journey of managing professional money started. Sir was confident enough to give us the money, always thankful and grateful for that. But we had to lead up to that expectation. And I can very proudly say today that we have done it, and not once, multiple times. Be it Bharti, when we bought it at the peak of the AGR issue. So we bought Bharti at the peak of the AGR issue when everybody was saying that the telecom industry will not survive and Reliance will eliminate both the players. We did our research and we invested in Bharti. Be it Bharti, be it ICICI, be it the contra calls like Bank of Baroda, Jubilant Foods, United Spirits. We have done it multiple times. Be it Indigo in 2023. That is stories most of the people will know. I will not harp much about it. But it is not only about making money. It is also about saving money. I clearly remember, I will not name the person. Somebody came to me with a portfolio. The portfolio was fairly good. It has quite a few good names, including one name, IndusInd Bank. When that portfolio came to me, 3 months before that, I had done my work on IndusInd Bank and I was sure that this company is not going to grow ahead. It needed a courage because my relationship was very nascent with that person. And that stock was very close to his heart. But I made the person sell it. And I had the confidence to talk about IndusInd Bank not being a money maker for investors in 2018-19 when I was one of the first times I had come on television. We don't shy away from guts of saving money for our clients. We repeated that in April 22 when we highlighted that Asian Paints will not make money for our clients. And the rest is history. But this journey was not smooth. Ajinkya sir mentioned about Zomato. Let me tell you something. Sorry, I'm sharing a slightly personal part. I had just started managing money for a client. I had navigated COVID. My confidence was high, making money for our clients, including COVID times. Our portfolio bounced back faster than the market. It is 2021. Ajinkya sir was on the tour of England. And Zomato was about to come out with the IPO. Such high was my confidence and such was the trust of Ajinkya sir that with one call during one weekend that next week the IPO is coming, we should invest, he committed a large chunk of money. And we did it. The investment did well. It was up around 40% in 6 months. Everything was good. And then all of a sudden, the new tech boom globally faltered. The stock kept coming down. I kept looking at the fundamentals and I found no reasons to sell the stock. But the stock was going down daily, monthly, weekly. It was the talking point in all our meetings. Me and Vivek have seen the tough days together there. But our conviction was there. And that conviction comes apart because of the Vedanta guidance that if you are doing the right things, if your thoughts are right, focus on that and not on the results. And the rest is history. But it is not about me, it is not about the results, it is about the process. Senora believes in that process. Let me give you an example of a recent stock addition which will tell how does Senora research works, because that is our USP. Just give me a bit. As some of you may be aware in this room, we recently added ABB in the portfolio. While you can see ABB in your portfolio being added in the month of June 2025, The work for ABB started in January 2025. That was the first time Senora identified ABB as an stock idea, and the investment team identified what all work we need to do. We broke down the work, divided the work. Let me explain that story to you. One team member was given the task of reading the last 5 annual reports of ABB. The second team member was given the task of hearing last 5 years, that is 20 con calls and 20 investor presentations of the company. The third team member was given the task of finding out as many dated and recent reports of ABB to understand what the other broking houses are saying, what is the market expecting, what is in the price, what is in the murmurs. The fourth team member was given the task of identifying what the peers are doing, what the competitors are talking about the industry, what are their plans for the industry. Each team member was given a week to do the extensive work. I was the common point. I was working with each of them on all the aspects to guide them. A week later, we convened together. Each of the team members presented to the rest of the other members what they have done, what they feel, why they like it, why they dislike it. The other team members asked questions around to see if the work is complete or not. That was the end of round 1. End of round 1, ABB, we found it as a good idea. It is worth looking at. But that's not the end, that's the start of the work. 2 months later, in March, we had round 2. Again the same process, but each time different person taking the different roles, so that the individual biasness done in round 1 is not repeated, so that the errors of any person in round 1 is not repeated, so that if he or she has missed something in round 1 is not repeated. Round 2 we again did, we again met, we again discussed. We realized our view in round 1 still holds, but the market conditions were not the greatest of time. If you remember, Jan-Feb was very tough for the markets, especially for high beta stocks. And the capex story was not working out completely because of the liquidity issues. But we saw a green light because RBI started talking about liquidities. We said, let's review it again 2 months later. In May, we came back. This time we never took a week. It just took us 2 days. And we repeated as a team everything. And we decided, okay, this is the time to buy the stock. Then started the process of how to fit it in the portfolio. Do we really want to sell each of the stocks a bit, or do we want to exit one of the stocks and replace it? We had already done a replacement in April by selling United Spirits and buying HUL. So we were not too sure which way to go. So we spent the next week to identify which strategy to follow. And now that's a public statement. We sold Jubilant Food to buy ABB. We do a lot of deep work. We depend on ourselves, because it is only because of your own conviction you can survive and hold a Zomato when it is falling from 160 to 50 rupees and see the bounce back to 250 rupees. And as Prayaksha said, don't worry about the price. When we bought Zomato, we wanted to see it going up every day. But when we had given up that it will not go up, the rest is history. Our learning in this process is, do the research, do your conviction, portfolio returns will follow if you have done it the right thing. And that is what Senora research is made of. And I'm very proud of it. It is not that the research is our USP. Our USP in research comes from a lot of other factors around it. One of the biggest factors is a focus universe. There's a common line I have seen right from Dalal Street to every market meeting to everything. Kya naya hai? What's the new idea? Senora doesn't believe in that. We are very monotonous. We have a focus universe of 50 stock because we want to have the grip of those stocks. We want to be, if not the best, one of the best to make the right views on those stocks, which is why one of our biggest USP right from the time we have worked is that we'll focus on only 50 stocks at a time. If we need to remove certain stocks over a period of time, we will do that, but we need to have a complete grip on those 50 stocks. By the way, to have a grip on those 50 stocks, we need to have a grip on their peers. We need to have the grip on the macro and the micro, and that is what is our USP, that we know what we need to have a grip on. We don't paint every stock with the same EBITDA, revenue and PAT. We know what is to look at each stock. We know how to differentiate between a SBI and a ICICI bank, although both are on the same bank, because the business USP of both the banks are different. And that is what happens when you do a deep dive work. And that is something which we can very proudly say differentiates us from our peers. We don't look at new idea every day. We look at consistency every day. Having talked about the research, having talked about the ethos, let me tell you what is the vision of Senora. Senora's vision is to prove the following. First and the foremost, the nuances and the general feeling that active large cap fund cannot continuously outperform the market. We have a dream, a decade down the line, we would have enough track record to prove to the world that a focused active fund manager, purely large cap, can generate consistent outperformance and superior return. That's the vision, that's the dream we want to build ourselves on. The other dream of ours is to hit at least 1 lakh families with the ethos that the right investment is more important than only returns. But none of it is possible without the support of each one of you who is present here, and a lot of you who could not make it but wanted to be here. The idea is to create a culture. Ajinkya sir spoke to somebody and said that support your daughter because she might create the culture of swimming in India. We have a dream at Team Senora to create that culture of large cap investing, quality investing, that can also deliver returns to our clients, to investors. We know it's a tough task, but no task is easy, and no easy thing is a task. So we are up for it, and we need support of you guys in this vision of ours. Coming to the fund, the other point which I am always asked is what kind of returns we expect, because ultimately everybody wants a return. I have made a comment to all my founder investors to AIF that if I have not delivered a 10x return in 10 years, I would be an unhappy man. It's a year, we have hardly made much returns, but I still stick my neck out and say that dream still holds. We have seen many times. I'll give you one example of Zomato. Zomato gave 3x returns in a year. Nobody, including me, would have plotted that. Let the market be by itself. If the company profitabilities are coming, market will reward. If market will reward, the returns will come. And I stand by that vision. And that vision is not an abstract number, 10x in 10 years. It is based on a psyche. It is based on a calculation. Let me get into that calculation for you. Your returns in the market is directly linked to the economy. That's something which we all understand. Indian economy on a nominal basis has been growing by roughly 10% over the last decade. Last decade saw a lot of challenges. And in spite of those challenges, if we can grow by 10%, I'm sure the next decade, which is much favorable to us, will grow much higher than 10%. Index as a nearly 30 years of data, I can tell you index gives a 1.3 to 1.7x return to the GDP growth based on the liquidity and the geopolitical cycle. So if India's economy has to grow by 10 to 12%, Nifty will grow by roughly 17-18%. Senora as a large cap strategy, last 6 years we have outperformed Nifty by 7%. If I plot that, because I am confident of repeating that and in fact bettering that, then that comes to 25% CAGR. 25% CAGR in 10 years is 10x. That's where the calculation, that's where the dream comes in. I will not take much of your time, but I will want to share the messages from some of the people who have reached out and they wanted us to share that because they wanted to be part of as a team and as an endorser to the event. Adi, I will request.
Hi, my name is Namita Tepe and I am from IIM Calcutta batch of 2013. I have been associated with Senora since October 2024 and I joined them as a diversification from my holdings in Nifty. What I liked about them was that they are focused only on large caps, so there is a safety and security associated with that. As well as I was pretty impressed by the research and the extensive insights that Mr. Mridul Jalan and his team have. And the icing on the cake has been that Mridul is always available for discussion on any stocks and he has quite a deep perspective on the stocks that he covers. So that way it is also a lot of learning for me. Thank you.
Hello everyone. I met Mridul 2 years ago and during the last 2 years we have met few times in Delhi and in these conversations I found Mridul has a very deep knowledge and understanding of capital market. His stocks picking skills amazes me and his research capabilities and the risk management tools that he deploys in delivering those results are sterling. So it is a very important day for Senora as you are celebrating this day today. Wish you all a wonderful day. I wish Senora and Mridul and its entire team a very happy journey and a very profitable future too. Thank you.
Hello everyone. Mridul's ability to understand the stock markets and its nuances is exceptional. He has this rare ability to cut through the noise and come out with clear, concise and decisive action points. I wish Mridul and Senora as they embark on this journey ahead my best wishes, and I am confident that many will benefit from their extensive knowledge and strong business acumen. Thank you.
I know Prayag sir always says that emotions need to be kept aside when you do something. But sir, pardon me for being a bit emotional today. It's a memorable day for me and my team. And I just wanted to speak with the bottom of my heart. Before we end the session, I'm happy if anybody has any questions to answer.
So Mridul, I don't have a question, I have a comment, right? If that's okay, right? So
Sure.
when we first met, because we introduced by somebody, we zoomed and we spoke about two stocks, Asian Paints and Bajaj. I asked you about those two, Bajaj Finance to be more precise. Just a little background, Asian Paints is my first job. I worked there 5 years and I've held the stock since then. Deep respect and almost in love with that company. And Bajaj Finance, where I've been coaching the leadership for the last 14 years when there were nobody, right? 2009 onwards. And that day when we spoke, I don't know if you remember, you told me to exit both stocks. And I said, "Ye to pagal hai, isse to baat nahi karni." But as you argued the points, I changed my mind, and that's why I'm with you. Thank you.
So, Mridul, obviously you have a very deep understanding of the market. When you obviously put some money in a stock, you obviously do your calculations, looking at the future, how the fundamentals of the company are going to be. But now we live in a world of uncertainties. There are wars going on randomly. India, Pakistan also briefly had something to do with that. We have a child sitting at the helm of US, if I may use that word.
By the way, I call Trump tariff as Trump trauma.
Exactly.
Yeah.
So, who's doing all the mischief and creating a lot of issues? There is China, a lot of trade wars and tensions going on. How do you factor all these things in your system of calculations and in your assessments and judgments of what stocks to pick, or are these part of your thought process?
Thank you, Kunal. That's a very important question. I will tell you the process we follow. First, let me explain the process to you. Whenever a news comes, the first step is to identify whether it's authentic or not. Today, in the era of AI and HOS, we hear a lot of things. So, reaction has to be first. Action has to be first only after you understood something. So, the first step is to find whether it's truth or not. The second thing is to find whether it impacts the fundamentals of the country, the sector, and the company. For example, Iran-Israel thing. What is the impact on India? The only impact on India is crude. The first answer to us was, it's good for India. Why? Because Iran will also need funds. If India can buy from Russia, during Russia-Ukraine war, India can buy from Iran. It doesn't impact us negatively. So I'm not worried, no action required in my portfolio. We highlighted the same thing through a video which I used to do every Sunday, where I said that the Trump trauma or the Trump tariff doesn't impact our portfolio because we are all focused on India growth story. India, whatever India imports is actually capital goods stuff. If they get cheaper, it is good. What India exports is a B2C items where the export driven companies will get impacted a bit. Our portfolio is immune to that. So whatever you are seeing because of such news flows is nothing but market volatility. Do we manage a short term money? The answer is no. Whenever we take a money, we ideally say give us money for 3 years at least. We refuse to take money for 3 months and 6 months. So things which impact the market only in the short term from a price perspective, that's the uncontrollable what Ajinkya sir was talking about. If something is uncontrollable, I don't want to worry about it. I anyway have less hairs. I don't want to lose more.
One follow-up question, if I may. You just used the word India's growth story. I keep hearing this word. Can you quantify this for me in terms of for how many years do you see that there will be this growth story, what we keep talking about in terms of number of years and in terms of wealth building? What is your take on that?
So quantifying the number to be precise is very tough, Kunal, but I will put a directional and a rational behind it. India's growth story is only getting strengthened day by day. What started as a pure demography, because India has the youngest population. Just to put you in perspective, India's working class population is larger than the total population of the 5th largest country in the world. That's the quantum of working population we have. The initial thought process for anybody who talks about India growth story started with that. From there, over the last 5 years, post-COVID, especially when the world was printing money, we didn't printed money. That strengthened our economy. The kind of strength today India's corporates and India's balance sheet has, we never had. And I can very well say, now it's getting public, I can very well say India's balance sheet is far superior than most of the developed economies. This has to get noticed. And when that notice happens, the FDI and the FII inflow will have no Excel calculation. I was just reading today morning or yesterday evening that in the month of April, our FDI inflow was 4-year high. When the world is talking about higher interest rates and all that stuff, Investors have no emotions. They look at returns. That returns is driven by stability. And when the large money comes in sacks, they come for large cap. No Excel can justify a 10x in 10 years. I have a logic for that passion. And I'm confident, barring a Six Sigma uncontrollable event like a Third World War or something, that dream will be fulfilled.
Thank you.
Hi, Mridul. I know it's not an investor meet, but can I take a liberty to ask you about a particular stock?
Sure.
Okay. I still remember that I think 2-3 years back you had come to Pune and you talked too much on the HUL and you convinced me to sell the HUL. And just I guess a month back you again purchased that stock.
Not again. We bought it for the first time.
Okay. So yeah, I sold it from my personal portfolio.
Yeah,
okay.
Right.
So was it because of the market behavior where was that purchase mainly done for the downside protection or a growth? Because we are talking about 10x in 10 years. And I am sure everybody wish that 10x in 10 years, it will be good for you as well as for us. So what was the rationale behind buying that HUL?
Okay. There are two parts to it. Before I answer that, Mekyam, I want you to answer something. I will not remember, so you will have to help me. What was the stock price difference between the 2 years you sold and then bought it?
It's almost same.
Okay. 2 years, there's a lot of time value to that money.
True.
So my first answer to you as a sales fund manager is, आपका पैसा तो मैंने ऐसे ही बचा लिया 2 साल.
Right.
But that's not what we bought it for. What is important to understand is a stock price is a function of what is the fundamentals of that company. The fundamentals of no company remains the same. We bought Jubilant, and when we bought Jubilant, we were very bullish on it. But the fundamentals played out, the price played out, and last 6 months we were cautious on it. So a view is, I am married to one person. I'm not married to any stock. That's the rule which I follow. The view on the stock has to be driven by the fundamentals. Like you sold it 2 years back. Some of our clients may have sold 6 months back to give us the money. We understand that. Right? But that doesn't make me shy me away from something if I like it. Now I'll answer why I liked it. That's a very good example to show another the deep dive kind of work we do. If you look at HUL, over the last 10 years, the revenue growth of the company is roughly 11%. But if you break it to volume growth and the revenue growth, then you will realize that the volume growth is 5 to 6% and the price growth is 5 to 6%. If you break it over a time, what you will realize is every 2 years, there is a phase of 2 years with 0 price growth and 0 revenue growth. Which means the growth comes in patches. Why the growth comes in patches? Because HUL is mostly done with the product innovation and mostly done with the penetration. So natural growth nahi aa sakta. That growth is linked to the consumption pattern. That growth is linked to the market, to go to the market strategy. Last 2 years, the growth were negligible because the inflations were high. Because whenever the inflation was high and the income growth was low. Because of this, there was something called downtrading in consumption. Which means if I'm using a HUL product, because my budgets are limited, I will start taking one step niche. So let's say HUL is at 100 rupees for a product and something is at 90, because HUL will bring either the grammage down or the price up because of the inflation. So if I have to buy the same quantity or at the same price, I have to compromise on the brand. And that is what leads to lack of volume growth. So when that happens for a continuous period of time, the management realized that and they start doing their course correction. You hear the HUL call for the last 2 quarters, you will get that the course correction is happening. And you see at the inflation, you realize that the inflation is coming down, which gives me the confidence that the volume growth will be back. And one statement of management that we believe that the time has come where we can protect the margins. The rural demand is fine. The urban demand we don't see correcting much from here, which means that the margins will be protected. If the volume growth comes with price growth, it flows down to the PAT. If you realize, my note never said that I have bought it for eternity. I said I see 50% returns in 2 years. Why do I talk about 50% return? Because HUL back in 2016 was the last time it was trading at around 40 times 1 year forward earnings. That's the lowest it trades. So if the earnings comes in a stock like HUL, it is bound to get re-rated. So the EPS growth and the multiple re-rating growth will get us to 50% in 12 to 18 months. And we'll review it again. My view might change again in 12 to 18 months, like it changed for Jubilant and United Spirits. The second part of your question about the market part. Yes, when we bought HUL, the markets were not the greatest. We could have thought about ABB that time also. But we chose a consumer stock for a consumer stock because we didn't want it to increase the beta of the portfolio in the volatile times, because that's an obligation we have when we are managing a third party money. But the first pick is always growth for us, not defensive.
Only large cap, right? And we had those discussions, and you have educated, that a risk adjusted return, you have to see it in a different way. So when we speak of multi-baggers, right, there are two things: P expansion and your earnings, right? When it compounds, it becomes a. We have seen that, whenever we are ahead on, Nifty PE, right, we are pulled back. Either the earnings have to support, or, you will have the fair correction and you will be there. Nifty 50 collection of large caps. Do you see, so we will, we will grow. There will be that compounding earnings, whatever demographics, earnings and all. Do you see a scope of, say, an overall PE expansion if you take, say, Nifty as a benchmark, where 30 would be a new normal? Because the moment we go to 23, 24 right now, everybody is jittery. Because that's where the large cap play is, what I understand the theme I'm saying. Where
30 PE can't be normal until you are in a situation where the world is crashing and we are growing. Because 30 PE means you are talking about an earning yield of 3%.
Yes.
That's too low in equities. But I can tell you that my portfolio PE can be much higher than 30, because the growth for a 30 PE, the growth has to be close to 30%. Now you talked about Nifty returns, Nifty valuations. Yes, I look at macro and I do cover macro when I write my themes and stuff. But Senora, again, I'm not trying to boost about our research, but Senora has the ability to identify what is coming in the Nifty next. We have Namita here. I did a podcast with her, and where I predicted Zomato in Nifty, and it happened in 3 months. In another discussion, I had said that Indigo should be in Nifty, and it is coming in Nifty most probably. The stocks which Senora buys from Nifty next 50 or stuff are those who comes in Nifty in next 3 to 5 years because of their earnings and PE expansion. Our focus is not on इसका PE क्या है. Our focus is इसका earnings क्या है और इस earnings पे इसको क्या PE मिल सकता है. If we can get that right, our returns will follow for sure.
Yeah, Mridul, I understand company fundamentals. I don't understand stock and share market, which is why I rely on you, right? So I track fundamentals and what's happening there and capacity into tomorrow. A lot of what you've talked about today has been about growth on the market, top line, etc. Right? I didn't hear. I'm surprised that I haven't heard words like data, AI, dark factories, etc., which is on the cost line mainly today, right? And I'm going back to the earlier point on HUL. My sense, looking at internally, right, on the organization fundamentals, but at the bottom line or middle line sense, is that they seem to have a head start on companies like United Spirits or, any of the other FMCG stocks they're doing on the dark factory, asset light data, I think. Do you look at that, and what's your focus there?
So we look at that from what the management commentary is saying. So for example, and I'll give you another example of a stock which we recently sold. We were confident of Jubilant not losing margin because the management in detail explained that how they are shrinking the size of their outdoor stores, how they are making the sitting arrangements lower to improve the capex to revenue model. So for example, coming to dark stores and coming to stuff, we look for those fine tunings within that. And coming to your AI point, it's not that Senora is not playing those themes. Now, whether it is data center, whether it is AI, we are playing all that themes. We are not playing that theme with those direct stocks because we don't know which one will make money. If you look at our contribution sheet, you will see that we have not lost money in more than 5-6 names. Senora as a house doesn't like losing money. That's our first ethos. So we are playing that through the ancillary, which is the power, Tata Power. We added ABB recently. ABB is our story for all the capex related to semiconductor, to AI, to data center, because that is where the automation processes of ABB will be used. Among the main players, we don't know who will make money. And a new technology today can kill anybody. That's a fast moving market.
I heard the dark store part, but actually I'm talking about something bigger, dark factories, right, which will actually improve gross margin and operating margins, right? I don't know if you're following that enough because that margin growth and therefore its impact on EBITDA could go up.
That will only happen when the volume growth comes, Jyoti. Dark factories will only work for you when the volume growth is back. We believe in that, but that I'm not saying will kick in immediately because you need volume growth to come back. अभी आप जितना बना रहे हो आप उतना ही नहीं बेच पा रहे हो.
Mridul, in case just if you want to end it, what inertia in life and complacency. One aspect of inertia is that there is no movement. That's one aspect. Complacency is it doesn't allow you to grow in life at any point. So these two devils is almost like the devil in the deep sea. So just since there is a good evening and a crowd which is congregated here, what at Senora, you and your team, if you think that have you, number one question, have you achieved the kind of investments you're looking for, number one. Number two, is your plan well chalked out to get more investments and take Senora to wherever you have envisaged?
Sir, if we have to achieve our dream of impacting 1 lakh lives in next 10 years, we are nowhere close to that. So where have we reached anywhere close to where we want to be? The answer is definitely no. Do we see inertia of stagnation at times, whether it is market or whether it is growth? That's part of any businessman's life. But that is where interactions with you come back to the focus. The controllable and the non-controllable things is where we differentiate. Coming back to complacency, I am fortunate to have team members who don't let me be complacent. We are always on the toes, not only to review our stocks, but to keep finding new stocks, to keep interacting with the same client and again, because we believe that money making is just one aspect of it. Making the client realize how is and what is the right way to make money is more important. And that is why probably I interact more times with my existing clients, even if no new inflow is expected from them, than with new clients. If we are done with the questions, as a last gesture, I want my team to come on the stage so that we can give the gratitude to everybody else present here. I'll request Vivek, Neha, Prachiti, Abhi, Adya to come on the stage, please. Whatever returns you see on your Excel, on your Demat account, you might think it is my work. Trust me, it's the work of everybody present here and few members who are not here. I'm only the face of it. Me and Vivek take the burn about it, but the effort goes from everybody else. It's an honest gratitude from our side, again to everybody, for making it to this day, making it memorable for us. Thanks for being here today. See you again next year, same time, probably in a different place.
A big thank you to everybody for joining us tonight. It was a great evening and hope you all enjoyed and gathered insights as much as we did. Dinner is served now. There's great food, great cocktails, and we hope you all have a great time. Thank you.
So winner of the quiz was Jyoti's team, and I will request Neha to hand over a small token from our side. I'm sure you give one answer at least.